CATEX TV. My name is Frank Fortunato. Today is Friday, December 11th, 2015. If you want to follow us on Twitter, please go to CATEX TV. Well, the perils of doing business with Chinese companies has risen to the headline stage again. Chinese conglomerate Fosun suspended trading of its shares today after reports surfaced that its chairman, Guo Gongcheng, had gone missing. Rumors of Guo's disappearance first appeared yesterday after financial publications in China reported a story citing unconfirmed reports that Guo had been taken off a Hong Kong to Shanghai flight by police upon arrival. China is in the midst of a corruption crackdown, with several top executives in the country's financial services industry having disappeared lately. In August, Xinhua news agency linked Fosun with another Shanghai businessman who was sentenced to 18 years in jail for embezzlement and bribery. At the time, Fosun denied the claim. More than one-third of Fosun's total assets are now invested in the insurance business. So Western companies in the United States and in London and in Bermuda are watching with great interest as to what's going to happen next. Berkshire Hathaway's newest online small business insurance platform has secured an A++ financial strength rating from AM Best. That's a better credit rating than the United States government. Eventual will operate as Berkshire Hathaway Direct Insurance Company and marks the company's latest foray into the primary market. The new carrier will write workers' comp and business owner package policies for small companies in the United States. The cover is going to be sold direct to small business customers through the internet, stripping out transactional costs associated with placing this type of business. Translation, not through brokers. The push into insurance comes as Buffett's main lieutenant Ajit Jain has pulled back on the reinsurance side of the business amidst challenging conditions in the reinsurance market. Well, the biggest AIG cull to date insofar as letting go of senior managers occurred yesterday. They announced that Chief Financial Officer David Herzog, Commercial CEO John Doyle, Asia Pacific CEO Jose Hernandez, and Executive Vice President for Claims Eric Martinez have all been named casualties in the company's latest cost-cutting program. During its third quarter result call at the beginning of this month, AIG revealed it was planning to part company with 23% of its top 1,400 senior executives. Lancashire Insurance today confirmed the departure of Cathedral Syndicate CEO Peter Scales and Chief Financial Officer John Lynch. We reported this earlier in the week. Apparently what's happened is they were dismissed from the group as a result of strains going on in underwriting views between Cathedral and Lancashire, which purchased the company last year. Sources have now indicated that Lancashire is fighting to keep active underwriter John Hamblin and other key staff on board. And Lancashire is said to be confident that it can do so. Cathedral has expanded overall since the acquisition, while Lancashire has deflated since the acquisition. So it's a little bit of a dicey situation with Lancashire, and their stock price has dropped precipitously as a result of this difficulty. Here's interesting news that is sure to bring smiles to the face of SCOR's senior management on Avenue Kléber in Paris. Sompo Japan Nippon Koa has announced that its board has voted to suspend a plan to increase its holding in French reinsurer SCOR. The Japanese investment giant, which is also one of the biggest primary insurance carriers in Japan, has decided to abandon its plan to raise its stake in the company, is buying stock in the public market, from 9% to 15%. They may have been discouraged by the increase in the value of SCOR's stock price over the past several months. This is actually probably good news for SCOR, because SCOR had lost several large reinsurance contracts with Sompo's competitors, other Japanese primary companies, after the news came out that Sompo was buying 15% of SCOR's stock and securing a board seat. Now, of course, SCOR will try to go back to those cedents and say that that deal is off. U.S. officials in Switzerland are warning Americans living in the country that they should be extra vigilant following a tip-off from the CIA that raised the Swiss terror level. Swiss officials have said that they have information of a possible planned terror attack in Geneva. The country's prosecutor said that it's hunting suspects linked to groups such as ISIS and Al-Qaeda. Law enforcement and security personnel have been deployed on the ground, and UN security guards in Geneva are stationed with MP5 submachine guns at entry points for cars, which is a highly unusual measure at its sprawling complex near the Swiss-French border in Geneva. Here's an interesting story. The Indian subsidiary of Coca Cola said this morning that it may have to close some bottling plants if the Indian government pushes through a proposed tax bill that would subject soda to a 40% sin tax as part of a broader fiscal overhaul. The company has 57 factories and bottling plants across India, and the sugary sodas are going to be put into the same group as luxury cars and tobacco. Obviously, that kind of a tariff is going to hurt the demand. This is part of a national goods and service tax that's trying to be pushed through Parliament in order to produce revenue. Several countries are debating so-called sugar taxes to tackle obesity and encourage healthier lifestyles. While more than a fifth of India's population lives below the official poverty line, the country is home to the third highest population of obese people after, where else, the United States and surprisingly China. It's not known how much Coca-Cola those obese people drink. That's the news for today. If we have any breaking news, we'll come back and tell you. Have a good weekend. Thank you for watching, and we'll see you Monday.